So a lot of economics this week, really. A lot of shit dealing with China and the U.S. government too. Just talking about some shit, you know. So, Doodle Bank, however you say this well-known bank, everybody know it, but they don't know how to say it. No, I don't know how to say it. But they upgraded Uber from a hold to a buy. Not even just that, they said their target price is 50. Uber's at 30 right now. Hasn't been at 50 since July 5th, since last year. You know? That's good news for Uber, which is like a tech company that's innovative and new. And those are all the categories that are getting just hit right now, you know? So, you can get an Uber at a discount. And after this news happened, Uber stock jumped 1.6%. Boom. Now, the government talking about Bitcoin. This was actually some good news for everybody, and Bitcoin responded well to this news. So, they were just basically talking about how federal agents going to come together and they're going to just regulate this cryptocurrency shit, and they're going to watch over the crypto and just make sure, like, nothing bad's going on, just to make sure there's no crashes, you know, stuff like that. And not just that, they want to make sure that illegal shit is gone. They're done with that laundering shit. They done with those transactions with those criminals. They want to make sure, like the FBI too, they just started investigating with all that shit. They really done with Bitcoin, especially since they known that people have been using it for illegal activities. But Biden mainly said, like, with all this going on, we want to maintain, like, the biggest capitalistic, most innovative, growing, like, country in the world. And, of course, Bitcoin will play a part of that. So, we want Bitcoin on our side. We gotta have some regulations and stuff, but we definitely gotta profit from it. So, here we go, the government again. They also dropped some shit about China stocks, you know? So, 5 companies, they reported some stuff a little early. A lot more companies are going to report too later, and that's why there's only 5 companies. And with the most popular Yum, that's like Taco Bell, KFC, you know, Pizza Hut. They got to fix up their numbers, really, their accounting shit. And if they don't, just like Didi that got delisted last year, boom, they are gone out of the New York Stock Exchange, you know? So they got till March 29th to fix these numbers, and all these other companies that could have reported, they got to make sure their numbers right, or they getting delisted. Like, they're done with this shit. Like, they know China over here with their strict shit. We had the little controversy with China in 2018 with that trading stuff, and also China, Taiwan, with Russia and Ukraine. You know, there's a lot of shit. China and some such shit. We gotta make sure we on the lookout. So, still on the China wave, JD dropped earnings, and this was before the little sect getting involved in everything, making all Chinese stocks drop. They dropped their earnings, and their stock dropped 17%. Boy, it was a nice big hit. They didn't really meet expectations with the revenue. They beat expectations a little bit on earnings. There was growth, but it was slowed down, just like Alibaba, you know. China just came in, stepped in, changed shit up, and it's just definitely taking a hit on these stocks. Whether that's a good thing or a bad thing, hey, who knows? Like, China has just a different way of, like, handling stuff than the U.S. Like, how we want to be the most capitalistic over here, biggest innovation. China's like, nah, like, they want to take the more, like, Charlie Munger loves China for being strict and disciplined and stuff. Like, and then the U.S. like a Kathy Woods type motherfuckers, you know. But this graph just shows, like, the top, like, Chinese stocks and just how they just been responding ever since, like, this little crash been happening, really. So, like, the crash really happened for, like, U.S. stocks around, like, November, you know. Chinese stocks, boom, this shit happened in, like, January, February, look at that, like, February-ish. So, I'm going to take my bet on these are really undervalued right now. Blink Charging, it's a little, like, EV battery. So, like, if you in the EV sector, you thinking, hey, get a little battery company. You know, you got Plug too. But they skyrocketed during COVID. So, it's not really surprising that they dropped a decent amount too. But they beat expectations on revenue, and that was by 32%. But 32%, goddamn, all right. Service revenue, boom, that shit's up over 270%. That's crazy. Look, these are like a lot of growth in this company. Look, sales up over 200%. You want a company with growth like this, and that's got corrected too. After this too was announced, boom, it was 8% loss on the stock too. That's mainly because there was a loss of 19 million, and that's 45 cents a share, and they only expected a loss of really like 39 cents a share. But hey, maybe next quarter. So, Oracle. Everybody was talking about this stock like a year, almost 2 years ago. COVID first happened. Was talking about getting TikTok. It's a big tech company. Big tech companies did a great time during COVID. Their stock was going up, and their stock went up basically the most next to Google and Microsoft, really right next to Microsoft. Better than Amazon, better than Workday, all these other companies in this graph basically. But hey, these earnings aren't really looking as good as they were like a year ago. Didn't meet expectations in earnings. It just meet expectations in revenue. Only had a 4% increase. That's like, come on, man, 4%? Really? Didn't meet expectations in short-term deferred revenue. And net income declined over 50%. Like, this company just gotta do better, this was just not what the people wanted to hear. The stock dropped 6% after saying all this shit, It's as expected. Come on now, guys. Now, Docusign. It's another company, but hey, it went up a whole lot during COVID. What goes up, man, that shit gotta come down. It is down 35% for the year. S&P only down 10%. But this company, it got a good history with earnings, and beating expectations. Look at the EPS, boom. Ever since quarter 3, beat expectations of what's called 2021. And this graph, it just shows constant growth in revenue and subscription revenue as well. And that number also gets pretty damn higher, like the percentage-wise too, of the growth. Now, that's what you want to see in a company, especially in a new company. You need to see growth like that. But hey, it's a volatile time for stocks like this. But it's a good thing they beat expectations in revenue, and they met expectations in earnings. Because hey, if they didn't, the stock would have took even more of a hit really than it already has been. But the growth's been slowing down for all these companies, but for this company too, and this number just shows it. Last quarter, they expected the earnings to be 46. Then it ended up being 58. That's a 26% surprise, They wasn't getting numbers like that this time. That's just like, it's kind of expected in a time like this, though. So Crowdstrike, that's another company everyone talking about, Got war at hand, stocks going down, but not these cybersecurity stocks, especially with these hacking ass Russians, But this graph, it just shows that since November, when the markets start going down as well, boom, these stocks start going down as well. But Palo Alto, it actually didn't really go down whatsoever. It's a sturdy little company they got there. But back to CrowdStrike. EPS was 30, only 20 was expected. That's a nice little surprise there. So adjusted EPS was 67 cents for the year. Revenue beat expectations. And what's it called? For the full year too of revenue, it was a 66% increase, while also subscription revenue was a 66% increase. So they've just been having growth out there. So there's another company, good growth company, and didn't get hit really like Docusign and all. But hey, this is a good time to be in a sector like this too. After they reported these earnings, stock jumped 13%. It's good. Dick's Sporting Goods, surprisingly, had a great time with COVID. Best 2 years they really had. The stock went down to 13 during the worst time at COVID. The best time in the market last year, around September. Boom, the stock was at 147, and its earnings and everything was justifying it. Really, it's crazy. I wouldn't expect it from an old company like a retail company like this. When everything online, come on, Amazon, really, they ain't got the shits. But no, their numbers are constantly began going up and beating expectations, and EPS beat expectations, sales beat expectations, same store sales growth, boom, beat expectations. This company, boom, was up 29% for the year, while the S&P was only up 10. Now, can they keep it up? Shit. So, Ulta, that little makeup company, putting this industry on its back, man. It's been having a great time. What's it called? Just like Dick's during this COVID shit. I would never expect it. Like retail. Well, Ulta, bitches love makeup, so yeah, it makes sense. Stock fell to 124. Bottom of COVID, boom, it hit all the way to 422. It's some good shit. Didn't really drop either that much since then, but they've been having good numbers, you know. Revenue beat expectations by less than 1%, basically 1%. And what's it called? It was only $2.2 billion the year before. It was at $2.73 billion now. Earnings 5.41. It was only 3.41 the year before. And only 4.16 was expected, so that was a nice almost 18% surprise. Like, come on now. And then last quarter, only 2.51 was expected. And then they actually had a 56% higher what was expected. Like, these are just numbers that really the stock it didn't see now, but showing good times for these companies. Now, Petco. If Petco, if you're trying to diversify, you know, it's another little retail company, and it beat expectations basically in everything. Adjusted EPS, revenue, comparable sales went up 14%. Excuse me. And then seven straight quarters they had double-digit sales growth. So like that's great to see. I mean, it's another thing is like consumer behavior also changed during COVID times. Like everybody got a dog, and not just that. Like it's millennials now with these dogs, and they're not like these baby boomers that was just like leaving these dogs outside. Like these dogs are their sons and daughters now, you know. Like we treat these pets like people, and we put money into these animals, more money than probably put. Hey, Argus got more clothes than me. Really, he be wearing them all the time. His dog go out. My parents feed him like shit, you know. Man, this dog is spoiled. No, it's the world now. He's one of the pets. Petco, it's one of the main suppliers of all that shit. Chewy too, you know. Want to diversify your portfolio? Maybe do it here, but opportunity cost. I don't know how much growth you got.